Hello, everyone, and thanks for joining us today for another episode of Wilson Weekly. We've got Doc Wilson here to provide us another update. Hey, mate, how are you?
Yeah, I'm good, Chris. It's not April Fool's Day, is it? So we've
We
gone
passed
past
that
that one.
now.
Yeah, so we're sort of chuffing on week after week, and the next one will be Easter in 2 weeks' time. So moving
Crazy.
along. Of course, it's been a big week this week. A number of reasons. The first one, of course, was we've had the latest meeting of the Reserve Bank. We'll have a look at the decision from the Reserve Bank in some detail. No surprises there. After the big surprise, well, to me anyway, it wasn't really a surprise, of the previous month with that cut. But of course, the other thing that's happened, Chris, is we've had the announcement we'll have a federal election. I think it's the 3rd of May that we're going to the polls nationally. Does this have any implications for the housing market? Well, sort of yes and no. We'll discuss that as well. I guess most importantly for homeowners out there and potential homeowners, we've got the latest home price data, units and houses, because My Housing Market produced models of both units and houses for March. So some interesting results there. How has the housing market responded to that interest rate cut? First one in 3 or 4 years, and we'll have a look at that in some detail and some very interesting results over March. And of course, we're now into the year, fully into the year per se. We sort of moved past the holiday and back to work period of January, February, and we're now well and truly ensconced in the year. Of course, we are coming up, or we are in now, as I sort of alluded to, the holiday month of April. This year we've got Easter running a little bit later. We have Anzac Day, of course, and we have the federal election campaign. So some distractions for our housing market, as we usually have in April, but plenty to talk about, plenty of data that's come through this week, and plenty of implications for the housing market as usual. So let's get started, Chris. We've got plenty to go through.
Sounds good.
So here we go. And my brand, of course, is My Housing Market. We bring this podcast to you every week in conjunction with the good folks at Infinity. And it's all about looking at the current state and future prospects of your housing market. So we bring you all the latest data on a week-by-week basis. We relate it to its implications if it's not just pure housing market data, such as rents and prices. It's about those key drivers of the housing market. We look at that, we analyse, we produce commentary. We also have our own in-house data sets in terms of prices and rents. We look at the auction market, of course, as well, because that's a reliable forward indicator of broader housing market activity. And we'll look at that, how it's related to what we've seen for prices over the first 3 months of this year. So My Housing Market and Infinity are bringing you all the latest information and commentary on the housing market. And that, of course, is about so you can make robust and informed decisions in regard to property, in regard to the property market, which, of course, is very important because really, I mean, here's a question. Is there more clickbait around the housing market than any other particular topic there is? I'm not sure. I think that's it would run pretty close to first in terms of clickbait. So we try to make this podcast a clickbait-free zone. So maybe I should get a T-shirt, no clickbait, and we can just let everybody know here that we're taking a bit more of a scientific approach to analytics for the housing market. We're not just looking for clicks. All right. So let's get started. It is the week ending Wednesday, April the 2nd. I hope everybody had a really good April Fool's Day yesterday and didn't get caught out by anything. Does that still happen? I'm not sure. But I know a lot of the American media were all over April Fool's Day, which is just sort of coming through now because most of what's happening in the US is a day before because of the time zone. So we've passed April Fool's Day, well, sort of, but we're now well and truly into the new month of April. So as I suggested, this week we're going to look at the latest home prices for March, the RBA interest rate decision for April, and of course the latest weekly auction result. So no surprise the RBA decided to leave rates steady over April. That followed that cut in February, which was the first cut in since the stimulus period of the COVID lockdowns. Remember those bad old days. And the last interest rate cut we had was in October 2020. So, over 4 years between cuts. So that shows that it was a significant move by the Reserve Bank. Some, including myself, thought it was questionable in terms of the data. But, Reserve Bank is there to make decisions, and they stand on rise and fall on their decisions, I guess. But, that cut in February was down by 0.25% to 4.1%. First rate reduction since October 2020. And that rate cut was quite unusual because it was, despite us still having one of the strongest labour markets in history, even though, as we looked at last week, the latest labour market data has been a little soft. We saw a fall in jobs created. We saw a rise in the number of unemployed. But the unemployment rate was steady because there was a change in the proportion of those that came into the workforce. That's the participation rate. And that kept the unemployment rate steady despite a fall in jobs and a rise in the unemployed. But it was an unusual move last month to cut rates. Interest rates typically are cut during periods where we need some stimulus. Examples there were in of course, the COVID period, which I mentioned, the end of the mining boom in 2012 and the global financial crisis in 2008, where we had, again, plenty of interest rate cuts, which are designed to give the economy a bit of a kick along. So a little bit unusual in that sense. Also, the position of the Reserve Bank on inflation. We'll look at the latest inflation data next week, but that was also a little questionable. They seemed to think, or they felt that they were happy that the inflation rate was moving down sustainably towards, or moving towards, I don't know how you move towards and you're still sustainable, but anyway, that's semantics. But even though inflation has certainly come down, it has been due to that government's electricity subsidy, and the impact of that subsidy is now starting to diminish, and of course, lower fuel prices. Now, the question is whether those lower electricity prices and lower fuel prices are sustainable. Well, I mean, we know those lower electricity prices aren't sustainable unless the government steps in again with another handout. I'm sure they're prepared to do that. And who knows where international fuel prices are going. I noticed the price of petrol at the pump is now, where I am, above $2 a litre again. So that's not good news for inflation. When we look at the breakdown in inflation, services inflation is still well above the target range at 4.3%. So, okay, I'm being the devil's advocate there in a way in regard to some of the analytics that were behind that interest rate cut. And my point to that is that, if we've perhaps had one a little earlier than the data suggested, it maybe means that we're going to have to wait a bit longer to get another cut. And that's why it was no surprise that there was a steady result over April, the meeting this week. And I think it'll be steady for some time. But, of course, that does rely upon the data. But no doubt, given all the to's and fro's in terms of looking at the reasoning behind that interest rate cut and the questions behind it, there's certainly one entity that would be really happy about an interest rate cut. And that, of course, is the government, who are now announced that there will be an election early in May. And what a nice way to go into an election campaign with a nice, fresh interest rate cut, the first in over 4 years. So they'd be pretty happy with the Reserve Bank's decision to cut rates, and they can work towards that. And look, central banks are always loath to cut rates during election campaigns per se, or raise rates, because that's seen as being, even though they say, yeah, well, we would do it if we had to, it does become a little problematic for them, given the political context of everything. So let's just have a look at what the Reserve Bank actually said in its statement when it made its announcement this week regarding interest rates. It said, I thought this is interesting, Chris. The Reserve Bank said that the board's assessment is that monetary policy remains restrictive. So they're sort of saying that they still reckon rates are high at the level they are. So even though rates, except for the downward movement, haven't moved much for the last 2 years, they still say it's restrictive. So I guess that's a sign that they believe that there's a downward future for interest rates eventually. Because if they think it's still restrictive now, when they get to a position where it's non-restrictive, it would be lower. So some hint there that, we may see lower interest rates as the next journey. But of course, that does rely on all the data. But the other thing that's interesting, the Reserve Bank really has no clear position on the economic outlook. It says the decline in underlying inflation is welcome. Yeah, but that's come from a very high number and was predictable given the steep fall in oil and also the bonus to households in terms of the electricity handout, which is a one-off. But they do say there's a risk on both sides and that they're cautious about the outlook. So they really don't know what the outlook is. And there are notable uncertainties in terms of what's going to happen in the domestic economy and the inflation. Well, there's always uncertainties, but isn't it the Reserve Bank's job to be a little bit more certain than everybody else because they're the ones that are setting the monetary policy? So I really think this is a little bit of a sort of an anemic view of, or certainly a neutral view of the circumstances of the economy within which they change monetary policy. So whatever. So anyway, they still say that they need to be confident that progress will continue so that inflation returns to the midpoint of the target band on a sustainable basis. Well, we're not really there in terms of underlying inflation, which is the preferred measure of the Reserve Bank. But the question is that word sustainable. What does that mean? Does that mean we're going to have 6 months of it or a year of it or just 2 months at the midpoint? And therefore, hey, that's sustainable. And given the circumstances of the international economy, all that tariff stuff that's starting to, be obviously a significant factor in global economic performance, in prospect, it's not quite sure we could get to a sustainable period on inflation. So just a little bit of gobbledygook coming out of the Reserve Bank there in terms of providing, a little bit more of a certain feel for what's happening in the economy. Anyway, we'll see what happens going forward. So when we look at the chart, you can see there that big rise, the big fall during the COVID period, the stimulus period, and then the big rise to try to quell that inflation that the stimulus packages generated. Quite a lengthy period there. In fact, all of last year rates were on hold, and we've had that cut in February. In February, which was the first cut that we'd had in over 4 years. So next meeting in May, the Reserve Bank will have the March quarter inflation data then. So we await that with some interest. So we spent a lot of time today on the inflation, on interest rates, but of course it's very important. And why is it important? Well, let's have a look at the latest data for home prices, because this is the first data released since that interest rate cut that we had a month or so ago. And guess what, Chris? Home prices have surged following that rate cut. And of course, this is not a surprise that typically lower rates mean higher house prices because it improves affordability and it improves confidence in the marketplace. And it's the first rate cut in over 4 years. So obviously that sort of really does help confidence along, particularly given we've still got a really strong economy as measured by the labour market, still at just 4.1% unemployment, even though it was a bit mixed, the latest data. So lower interest rates, strong economy. Gee whiz, are we surprised that house prices are rising, particularly after a couple of years of strong growth in most of the capital cities? So house prices and home prices surge following that interest rate cut, and overall activity has risen sharply as the year has unfolded. Now, look, we've got to put this in some sort of context. It does follow the January-February period, which is always a quieter period in the market. Seasonal effects, you really can't do much about that unless you start fiddling around with a subjective a model of seasonal adjustment, which doesn't work over the longer term, because seasonal adjustment models are a hostage to things that come out of left field. We saw that during COVID, where all the ABS seasonal adjustment models went out the window because previously strong months became weak months and previous weak months became strong months. So there's always a danger to that. We don't use seasonal adjustment. We use a pure statistical model. But the nature of our model, because it's derived from the Reserve Bank model and the ABS model of house prices, gives a natural seasonal adjustment to it, but not a perfect seasonal adjustment. So we always see some weaker activity in those early months of the year, which of course are holiday months and back to work months, and December being one of them as well. And that's why we always see it a little bit weaker. So we need to put it in context. Yes, we've had a big rise over March compared to February and January, but notwithstanding that rise, it's still a very strong position in terms of the response of the market to lower interest rates. So here's the data. You can see there that big change, easing in January and February. Those weakenings in January and February were the first consecutive falls in the national house price for a couple of years, but bounced back very strongly over March, as you can see there. When we look at the breakdown, Sydney, a very strong result there. Over the month, up 1.8%. That's Sydney's strongest result for some time. So far over the year, up just 1%. So it's absorbing those weaker February and January results. Melbourne also a good result, up 0.8%. That's the strongest growth that Melbourne has recorded for some time as well. Brisbane up 0.3%. Adelaide up 1.7%. But hey, look at this. Perth's house price fell by 1.2% over March compared to February. Now, this is the March quarter, so it's the 3 months to March versus the 3 months to February. So there is some seasonality there, but, you know, this is the first fall in Perth's house prices for a couple of years. So it's really quite extraordinary. Now, Perth has had remarkable growth. You can see that even over the past year, Perth house prices with that fall still up 15.8%. That's a fantastic result over 1 year for a Perth homeowner. And over the past 2 years, have a look at this, Chris. Perth house prices up by 39.6%. So in a way, it's just really getting to the top of that cycle. Affordability barriers, plenty of people have done their buying and selling. But nonetheless, an interesting result for Perth, just perhaps indicating that it's come off the boil in the shorter term. Let's wait the results, but particularly strong result there for Sydney. And we shouldn't be surprised at that because as we mentioned here every week when we look at the auction results in Sydney have been quite strong this year. And as we said, auction activity is a good forward indicator of general housing market activity, and it's standing up. That premise is standing up when we look at that 1.8% growth in Sydney and up 1% over the year so far. And that does reflect what have been, quite robust clearance rates in Sydney, certainly higher than where they finished last year and higher than where they were a year ago. Similarly, Melbourne's tracking its best auction results in some time, and it's also produced some growth. So overall, the national house price up 1% over the March quarter compared to the February quarter, and some quite encouraging results there. Only one capital city reported a fall, and that, as we discussed, was Perth. And as I said, we need to take this in the context, it is following a weaker period traditionally, which is the early period of the year. But when we look at the year on years, we can see there that performance still is quite positive going forward. And of course, it can only have been helped by lower interest rates. And that is still yet to come into the market, even though April will be a subdued month in a sense because of the usual holiday distractions. And this time we've also got a federal election campaign to think about. So but nonetheless, that lower interest rate will work its way into increasing confidence and improving affordability. Unit prices, they are up sharply also following that weaker earlier period, but that was 2 months in a row now with unit prices higher. Again, this is some big results. Sydney, again, good result there, up by 1.2%. Melbourne up 1.4% for units. Real sense of a revival there. Early days in Melbourne's unit market. Look at Brisbane. Holy moly, up 2.2%. That Brisbane unit market just shows no sign of slowing down. And as we always say here, it's not that long ago when the pundits, the so-called experts, were telling us that Brisbane unit market was saturated, and that prices would remain stagnant forever. But other than that, it's now been some remarkable growth. Look at unit prices in Brisbane over the past 2 years, up by 43.7%. Hello. And that's a big unit market, that Brisbane market. It's not a smaller unit market like Adelaide and Perth. It's a big market, and still rising 2.2% over the month. That's a big move. And so far this year, Brisbane units are up by 4.2%. So still plenty of energy in those Queensland housing markets, particularly Southeast Queensland housing markets. Now, the national unit price was up by 1.3%. Of course, the national prices are based on weighted averages. So we look at the proportion of the number of sales in each of the capitals. So, of course, Sydney, Melbourne and Brisbane make up the bulk of unit sales nationally, capital city unit sales nationally. So when they have good results, 1.2, 1.4, 2.2, that's going to mean a strengthening of the national unit price because they make up the greater proportion of activity, hence up 1.3% growth. So some good results there for the unit market as well. If you're looking for the full report, which I advise everybody to get onto because it's got lots of commentary for the March house and unit data, there is a QR code which you can scan and you can get a PDF copy of that report. So you don't have to pay for it, just work it through here in this great podcast brought to you in conjunction with Infinity. Okay, let's have a look, finishing off with the latest auction results. Clearance rates were down a little bit last weekend, but the offset to that is we saw a surge in listings, so maybe a bit more supply and a little less pushed interest rates down clearance rates down. I'm interest rate in the brain at the moment. Pushed those clearance rates down because buyers had more choices. So lots of listings, clearance rates down a little bit. And it'll be interesting to see whether the federal election announced, as we said, will subdue activity. I'm not so sure it will. We still have the holiday period, so that's always a bit of a negative in terms of distractions. But let's see if that's added to by some issues over the election. Not sure we've got the strength of policies this time around that make people a little bit wary about either one or the other parties, but we'll see. That's a topic for another set of analysts, not me, thankfully. So here are the results. 1065 auctions in Sydney, big rise over the previous week. Clearance rate still good, down a little bit, but the Sydney clearance rate has been tracking above 70% for most of the year, which is higher than where it finished and around about where it was a year ago, which was a strong period of the market. We won't look at what happened last year over the same week because it was Easter. We had an earlier Easter, so forget about that. Melbourne surge in auctions also. Clearance rate down a little bit, but still tracking higher than where it finished last year, the Melbourne auction market. Brisbane, similarly higher auctions, a little bit higher the clearance rate in Brisbane. Adelaide, a bit of the same old, similar numbers to the week before in terms of auction results. And the same deal there, but a little bit lower in terms of the clearance rate in Canberra with similar auction numbers. So when we look at the trends, you can see quite clearly there the rise in the Sydney market. When we look at the monthly clearance rates, tracking higher than where they were a year ago and certainly higher than where they were at the end of last year. And hey, why are we surprised Sydney house prices are growing again and unit prices when we're seeing these strong auction results? So make sure you get a look at those auction results. You see them here every week because they do give you a good sense of what's happening broadly in the housing market. Same story there in Melbourne. Good results to start the year. In fact, now tracking ahead of where it was at the same time last year. And we're seeing prices growth starting to re-emerge in Melbourne. The question is, will it continue? Brisbane, a little bit lower than where it was a year ago, a little bit higher where it finished the year. But of course, a year ago, Brisbane was in the midst of a very strong period of growth. Prices are still growing in Brisbane, as we saw, but these clearance rates are a little bit lower typically than the larger capital cities, Melbourne and Sydney, and that's just the nature of how Brisbane treats auctions as a marketing tool. Adelaide's certainly not as strong as it was a year ago or at its peaks last year. Still growing, but not at the same rate. And again, that's reflected in the clearance rates, which help us to understand more broadly what's happening in the general housing market. In Canberra, is it reviving? Is it not? That's still an open question. Still a little bit of 2 steps forward, 1 step back, or 1 step forward, 2 steps back, whichever you want for the Canberra market. So we need to keep looking out for those results, and you can get them on my LinkedIn channel, Doc Andrew Wilson at LinkedIn. Every Saturday night around about 6 o'clock, you get the Capital City Snapshot, hot off the press. And on Sundays, you can get the full national report, which includes regional breakdowns for Sydney and Melbourne and the top 10 sales under the hammer over the week for the capital city. So get onto that one on my LinkedIn channel. If you've missed the latest national report, auction market report, you can get a copy of it there by scanning that QR code. Scan that code and you'll get a PDF copy of the latest National Weekly Auction Market Report. So we're just going to finish off now, Chris, with a bit of an ad for our housing market app. We have this fantastic suburb-specific housing market app. It tells you, in conjunction with Infinity, of course, it tells you all the data, current data, real-time data, because it's refreshed every day, regarding the asking prices and asking rents for properties in the nation. So all suburbs are counted that have data. So it's a comprehensive model. You need to, if you want to get a hold of it, there's a QR code to scan or click that link. You need to get a password. Hello, password alert, password from the good folks at Infinity. So get onto that to get access to this fantastic app. There is a screenshot of the app. You can filter it for price or rent. You can filter it for the state, outside capital city region, or the capital city region. Here we're filtered for Sydney. We're looking at Blacktown as a suburb. You can filter it for house unit or townhouse. We're filtering for house. You can also filter for the number of beds. Oh my God, isn't this great how we can drill down to specifics? And this is a 5-bedroom house in Blacktown, not just the median asking price currently. So it tells you what the agents and what owners are pitching in terms of what they think their properties are worth. So this tells you how much the market thinks your property is worth. So it's not just the median price, asking price, it's also the low and the high. So you know the high and the low in terms of what the market's asking at the moment and the number of properties for sale. And you can do exactly the same thing if you're a landlord or a potential tenant, you're looking for what rents are holding for in that suburb at the moment and the number of properties that are listed. In our new addition for investors and just the general public is our top 10 suburb yield. So this tells you on those same regional breakdowns, what are the top 10 yields in each of these areas for suburbs in each of the areas. New South Wales, this is New South Wales, Sydney capital city region. We filter it for units. We can also filter for townhouses and houses. And we also have the number of beds. So this gives you the top 10. It tells you the yields. So that's in order of 1 to 10, top 10. It also gives you the vacancy rate. So you can take a scientific approach to looking at where the good returns are and where the prospects are on a suburb by suburb basis. It also tells you the number of properties currently for rent and for sale. So you can look at supply and demand for both the rental and the sales market. And if you click on the actual link to the suburb, it'll actually take you to a map of the suburb. So you can say, hey, where's this place? Well, here it is. Just click on the link. So a great little addition to the My Housing Market Infinity app and great for investors. So this really is a comprehensive tool kit if you're looking for all the data, real-time data in our housing markets on a suburb basis as it's occurring. So get onto that one. Next week, we're going to look at rents, the March home rents, February inflation. Already talked about that a bit today, and the latest weekly auction results. If you missed the report today at all, the podcast, you can get a PDF copy of the report there by scanning that. So off you go, get that. Plenty of information. Is this information overload? No, you can never have too much information when you're making decisions around about property, and that's what we try to do, is to give you as much relevant information and commentary as we can on a weekly basis, so you can make informed decisions in regard to the property market. So that's it for this week, Chris, from My Housing Market and, of course, the good folks at Infinity. And I look forward to catching up again next week.
Sounds good. Fantastic as always, Doc. Thank you for your insight. Look forward to what next couple of weeks bring up, especially with being short weeks. And as you said, that it'll be interesting to see how the data pans out over the next few weeks.
Yeah, interesting stuff. Thank you, Chris.